I caught up with Saurabh Gadgil of P N Gadgil. Remember, the company listed only a few weeks ago, have created enormous and significant investor wealth. This is the first time they've reported their numbers post-listing. In fact, listen into what Saurabh has to say as we talk about the earnings, the outlook for festive season, and of course, what sort of volume growth he's targeting in FY25.
It's the first earnings announcement, so it's really special, and it's been a good quarter in terms of revenue, in terms of profitability, in terms of e-commerce. There's been growth on all parameters. Just to start, our revenues increased by 33% in Q1 of FY25 as compared to FY24. FY24, we had a top line of 1,256 crores, which increased to 1,670 crores approximately. So that's a 34% rise in the top line. When it comes to profitability, the PAT, there was a huge significant jump of almost 60% from a PAT of 22 crores for FY24 Q1. We have moved to 35 crores PAT for FY25 Q1. So that's a significant increase. We've added 3 stores in Q1 of FY25. When it comes to e-com, we have shown a significant increase of 120% in the top line, from 13 crores to almost 30 crores. So it's been a good quarter. It's been a significant improvement on all parameters as far as Q1 is concerned.
Right. Saurabh, your growth has been strong. You're growing at 33%, which is much higher than most of your industry peers. Is this sustainable going ahead? Can you give me a sense of what is the kind of expectation we can have in terms of growth trajectory for the next couple of quarters for the rest of FY25?
We have been growing a little more than the industry, and we believe that that's because of our effort towards, store efficiencies, effort towards getting more share from competition. For the next couple of quarters, we feel that a 20-25% increase is sustainable, and we are confident that we'll be able to achieve those figures.
Saurabh, break down your top line for me, right? What are the key revenue drivers? So has it been gold? Has it been diamonds? Has it been precious gems? What is the revenue contribution from various product offerings?
Primarily, gold has been the major component of it. Our studded ratio is around 10%, and the balance is gold with a portion of around 3-4% of silver. So 85% would be coming from gold. 3-4% is from silver, and the balance 10% is from diamond and studded stone.
Right. Saurabh, we're going into the festive season at a time when there's a little bit of nervousness, jitters around what's happening globally. So there's some amount of geopolitical stress, which has meant that gold prices have been on the rise in the last few months. In fact, year to date, gold has been an outperforming asset class. Now, with the kind of elevated prices we are seeing in gold, do you feel like this could impact the demand, the festive demand this year?
I believe that gold is looked at not by consumers as a short-term option. It's a part of our culture, it's a part of emotions, a part of festivities. So even gold prices till now have not been a jitter. There have been short pushbacks where people have kind of adopted a wait and watch model, but have again entered the market. As I'm saying this from the Q1 result, that Gudi Padwa and Akshaya Tritiya both were at a time when prices were really high. But we saw a phenomenal increase in sale on both these festive days. Gudi Padwa, in fact, had a 70% plus jump on a single day sale compared to the last year's Gudi Padwa. Same with Akshaya Tritiya, 35-40% jump in sales. So this gives me confidence to say that I think the Indian market is strong and people are looking at jewelry with a long-term perspective. And I think gold prices would not be much of a jitter. There can be phases when people may choose to wait, may choose to think a little before making the purchase. But I think the market's strong, and I don't see a big impact on gold prices really having on the market. The season looks strong ahead, not only the Shera Diwali, but also the upcoming wedding season. So all in all, I think the sentiments look positive, and gold, even though it's in a high, the sentiment remain bullish, consumer interest remains strong. So I think from the perspective of the season, the market looks good, and I think the demand looks good.
Right. Sort of looking ahead, right, because the price of gold has gone up, your value of sales has also jumped significantly. How much of the recent revenue gain or the increase in revenue you're working with over the next couple of quarters can be attributed to volume growth? So what is the sort of volume growth you're expecting in the next few quarters?
So when it comes to volume growth, in the Q1, we have seen 15% plus volume growth. Value has been 35% and volume has been 15-20%. I think to sustain ahead, 10 to 12% volume growth is something which we feel we should be able to achieve. Like you rightly said, value can be much higher, but what we track closely is also volume growth, and that I think should be 10-12% at the company level.
Right. Saurabh, I want to understand any inventory gains. What is your hedging policy, and what, I mean, have you held any inventory at low prices in the recent few months? Give me a sense of that. Any sort of inventory gains that we can expect going ahead once we get a sense of your hedging policy on gold?
We are using gold metal loans and MCX as a part of the hedging strategy. So post IPO, most of our stock is now backed by gold metal loans, and the balance would be covered by our MCX. So when it comes to pricing, we would be fully insured and would not be seeing any gains going ahead. So the policy now has been that we would not be open to looking at the gold price risk on the stock book. Q1, yes, we were not a listed company, so there was a impact of a bit of gold gain, and the impact would be less of 5 crores on the PAT level.
Right. Saurabh, just a quick one on margins. Margins have seen a marginal improvement in this quarter. Looking ahead, what is the outlook on margins? And also what I want to quickly understand from you when I was trying to understand on this hedging policy is that can we expect you to have made money on increased gold prices, or you buy and then you sell? So there's very little that you can gain in terms of pricing or the gains on gold prices.
See, we have made very little on the gold prices because we buy and sell, and since we do on a average more than 5 stock turns at a company level, the impact is not very high. But having said that, like I mentioned, the impact would be 4 to 5 crore on the PAT for Q1. But as post listing, we have adopted the policy of gold metal loans and MCX, so that would neutralize any impact on gold price movement.
Right. Saurabh, what is the outlook on margins? Can we expect that to improve going ahead for the rest of the financial year? Any upside risk to margins?
The margins the margins currently what we're looking at, I think are definitely going to be sustainable. We should see some positive improvement on those lines. At the retail level, we are seeing that the store level we should be looking at a 13-14% gross margins, and we are looking at the EBITDA levels of around 7% at retail and around 4% PAT levels, and that's something which we feel is what we are aiming for. Diamond portion is increasing, so that's going to be an added buffer to the margins. But having said that, these margins what we have today have seen, I think are definitely sustainable.
So what store count are you targeting at by the end of this financial year? And I know with the recent listing, you've managed to have quite a healthy sort of cash balance on your books. Would you also fund these new store additions through accruals?
We have already mentioned publicly that we are doing 9 stores in the 9 days of Navratri. So today is the fifth store launch, and we have 4 more store launch. So as of end of by Diwali season, we should be adding 9 stores to the tally. And post that also there are some plans for the expansion. And as we have mentioned in DRHP, the plan is to add 12 more stores, primarily in the state of Maharashtra, and that is what we are on track with.